Palantir just gained 28% in a single day. One of the most beaten-down giants of 2026 delivered an earnings beat, and the market's verdict was explosive. Here's the full story, every number from real data. First, the backstory, because it's what makes today make sense. Palantir opened the year near $178. By late June, it had collapsed to $107, down almost 40%. And coming into this week, it was one of the year's biggest mega-cap losers. Here's the whole year. On one chart, the long fall through spring, the June bottom, weeks of drift, and then one violent green day at the end. Let's break down what caused it. Monday night, the report. Earnings per share, 41 cents against 35 expected. A clean beat, 6 cents above consensus straight from the earnings calendar. The top line beat too, $1.94 billion in revenue against $1.81 expected. $130 million ahead of the street. Both lines of the report came in as beats, and Tuesday delivered the verdict, up 28.1% in one session from 125.65 to 160.93, one of the most violent single-day mega-cap moves of the year, in either direction. Now the lesson, and it's the most important idea on this channel. 2 weeks ago, Alphabet beat its numbers and fell 7% because it was priced for perfection. Palantir was priced for failure. Same event, opposite starting point, opposite verdict. For scale, last week, Microsoft jumped 15.5% on its earnings and Amazon 15.3%. Historic days for the two biggest companies on Earth. Palantir's move nearly doubled both of them. The mechanics matter too. When a stock falls 40% in half a year, doubters pile in. Short sellers, skeptics, sidelined money. A beat forces all of them to change their minds at the same time. That simultaneous repricing is what a 28% day looks like. But keep it honest, where does the stock actually stand? Still down 9.5% for the year and 22% below its all-time high of $207. One giant day did not erase the year. A quick decode because you'll hear the phrase short squeeze all week. Short sellers borrow shares betting on a decline. When good news hits, they're forced to buy those shares back to close their positions, which adds buying pressure at exactly the moment the stock is already rising. It's fuel on a fire, and it's part of how 28% days happen. Under the hood, the fundamentals: $5.2 billion of trailing revenue and 90 cents of trailing earnings per share. Palantir is profitable and growing. The debate was never whether the business works. It's what that growth should cost. And what it costs is striking. At 160, the stock trades at roughly 179 times trailing earnings, about 74 times trailing revenue. Even after a 40% drawdown, this was never a cheap stock. Wall Street saw this setup coming, by the way. The morning of the report, CNBC ran a headline asking whether Palantir could pull off a, quote, Microsoft-style comeback, noting what the options market was implying. Today was the first answer. Zoom out, and this was earnings week's opening statement. Palantir kicked off a week where AMD and SpaceX report next, and after July's unwind punished the entire AI trade, the first verdict came back emphatically positive. Put this season's verdicts side by side. Tesla missed and lost 14.5% in a day. Alphabet beat and still fell 7%. Microsoft beat and gained 15.5%. And today, Palantir beat and gained 28%. 4 reports, 4 wildly different verdicts. And every one of them decided by expectations, not headlines. What to watch from here, whether the repricing holds. Violent post-earnings moves get retested in the sessions that follow. The next few days tell us if this was a true reset of expectations or a one-day squeeze. The scorecard: earnings 41 cents, beat. Revenue 1.94 billion, beat. The reaction: up 28% in a day. And the honest context: still down on the year, still well off the high. One thing to know, and it's worth writing down: the market doesn't grade results. It grades results against expectations. Alphabet beat and fell. Palantir beat and exploded. The difference was never the numbers, it was the starting line. And the week isn't done. AMD and SpaceX both report tonight. The full previews for both are on the channel. Prices from Yahoo Finance. Not advice, just the tape.